Subscribe our channel eFinance Management and click on the bell icon to get update on new videos. We are going to explain triple net lease. A net lease is one where the lessee pays the rent to the lessor after reducing the expenses to be paid for maintenances, taxes, insurance, and repair of the asset. There are three types of net lease: single net lease, double net lease, triple net lease. Single net lease. Net leases are done usually in commercial agreements for real estate where the tenant is paying the property taxes along with the rent. The owner of the property will only look after the maintenance and other operating expenses of the premises. A single net lease is not very commonly used. If the commercial space is a shared one, each tenant pays tax in proportion to the total building spaces leased by him. Utility and janitorial services also come under the tenant. Double net lease. These are net leases where the rent, proportionate property tax as well as proportionate property insurance is also paid by the tenant. The owner would be looking after the external expenses of repairs and maintenance. Triple net lease. This is the most commonly used type of lease for commercial and even some residential estates. Here the tenant will pay for everything from rent, property taxes, insurances, and common area maintenance and repairing expenses, also known as CAMS, common area maintenance items, hiring regular staff. And maintenance help can also be part of this, for example, receptionist, lobby attendant, etc. Pros and cons of triple net lease. Pros to the tenant. The biggest pro for tenants under such an agreement is the consistency of operating expense. The tenant can take care of the most essential like insurance, taxes, and then manage the maintenance and repairs from their own valued parties. Thus the expenses are transparent for the tenant and he can make better decisions on how to optimize such expenses. The second benefit to the tenant is that the amount charged by the landlord is certainly lower than in the case of gross lease. Also, in some cases, the tenant is a known company or brand. The capitalization rate for the lease amount is lower due to the creditworthiness. Cons to the tenant. The tenant should carefully review the agreement details and the limits on each of the expense heads. There should be clarity on the frequency of increase of these expenses under these heads. Pros to the landlord. This is the easiest way for a landlord to be free of issues of maintenance and repair and can look at the rental amount as a steady income. The hassles of employing people and managing between different expense heads is passed on to the tenant. Cons to the landlord. The landlord has to be more systematic and organized in maintaining the expense to charge the tenant appropriately. Thus for him, higher time and effort of transparency is required. Thank you. Please subscribe, like, and share our video.